All right, so before we start, right, this is some risk disclaimer for us. So today's market webinar is intended only for educational and informational purpose only, and participants shall not take it as a financial advice, nor a trading signal. So the accuracy and reliability of the information provided cannot be guaranteed. So Pure Prime and I hosting the sessions are not liable for any losses or damage resulting from the use of the information presented. So without wasting any time, we are going to start our webinar right now. So today's topic, right, we are going to cover things regarding the basics of trading commodities. So after today's sessions, you guys will able to learn something regarding how can we trade in gold market and then with oil market as well. So some of the fundamental news that I'm going to teach you guys on how can we analyze this oil as well as the gold market later. So we also touch things regarding the CPI data, the inflation data, and then we also touch things regarding like the non-farm payroll, which is also another very important data that can help us to determine a good trends for the gold market later. So this is the key things that we are going to discuss today. So this is our today's highlight. So the first thing that we are going to discuss is fundamental of the gold market. We will talk about why the gold market might be increased in future and why the gold market is going to drop. Some of the fundamental that can provide some impact on the gold. These are the things that we are going to discuss from it. And then we also talk about monetary policy and then the gold market. As you guys know, currently the most important news is mostly surrounding about the monetary policy. You can notice that news about increase in the interest rates or decrease in interest rate, especially from the central bank, will also provide a huge impact towards the gold market. Normally, you can notice, right, if the Federal Reserve saying that they are going to increase the interest rates aggressively in the next quarter, then it will continue to provide some impacts towards the gold market. So you guys might wondering why does this thing happen? So we also discuss about it later, and then we will also talk about the gold market. Why we consider gold as a safe haven asset. So when does the gold will go up? During like high risk event. So what is the high risk event recently? So this is also another thing that we are going to talk about. And then by the end, we will talk about the fundamental of the gold market. So gold is also another famous instruments for the global investor also. So these are things that we can also try to understand from it, and then maybe can enhance our trading strategy from the gold market as well as the oil market. Okay, so the first thing, recording the fundamental of gold. So normally you can notice overall trend for the gold, right? It will likely to determine by two things. The first thing is regarding the economics outlook. For example, if recently most of the economics data, especially from the United States, they provide some very, very good reading, including you can notice the GDP data positive, CPI data very, very high, and then maybe the employment data, including the non-farm payroll data. If the economic data provides some very, very positive reading, it means that US economics outlook are very, very good. So this is the time that will cause investor to shift their portfolio from gold market, like the safe haven gold, into others equity asset, like higher risk asset. So to put it simplified, if the economy is very good, the economies from the US improve in future, then investor might consider to sell gold and then invest back into the US dollar, because when economy is good, dollar will likely to increase. And then another thing is equity market, US equity market. So when the US economy is very, very good, then there will be a chance for the companies in the United States, they might profit from it. So investors will also shift their portfolio from safe haven into the risky asset, which is equity market, like shares, like stock market, maybe Apple, maybe Tesla. So positive equity, positive economics outlook sometimes will also trigger some sell-off of the gold. Then we will also discuss how can we justify whether the economics outlook in US is good or not. We will talk about it later. And then another thing is regarding dollar. So a lot of traders already understand that when the dollar increase, right, a high chance the gold market will drop. So they are mostly negative correlated one. So if you don't know what is the fundamental for gold as for now, maybe you can look towards the US dollar. If overall US economy is very good, and then we can expect that maybe the CPI data is very good, then this is a chance that maybe you can consider to sell off gold. So then normally their relationship are negative correlated one. So when dollar increase, gold market will drop. So this is the thing that you need to understand from it. So two major fundamental, positive economics outlook And then the appreciation of the US dollar will likely to trigger some sell-off of the gold market. So this is a two major thing. So now we can understand how can we justify whether the US economics outlook is very good or very, very bad. So we can use certain things. The first thing is regarding we can try to understand how their economics performance by looking at their economics data. So the first data that are very important is regarding the gross domestic products, which is the GDP data. So GDP data we can understand it as the overall profits of the countries. So if that country performing well, there will be a high chance that the GDP will provide some positive reading. So if GDP positive, normally it will cause the US dollar to increase and then the gold market to drop further. So in future, if you guys notice this, there will be a gross domestic product to be released in future. You can focus on it because normally if GDP very high, it means US economic performance are good. So economics outlook is very good, and then US dollar might also increase also. This is a key factor that might cause the gold market to drop. Gross domestic product seems like a very confusing, but you can just memorize or understand it as the overall country income or the revenue. Okay, but to actual formal words, it's like GDP is actually measures the growth rate of monetary value of all goods and services that are produced within the country in a specific time frame, by just like the revenue of the country. And then another thing is regarding the job market. So normally, right, if the job market are performing well, a lot of people get a job in the United States, then we can still expect this will also cause the economy in the US become very positive. So same thing, positive economics outlook along with the positive movement for the US dollar will likely to trigger the gold market to drop. So normally you can notice the major news regarding the non-farm payroll. Experienced trader might understand from it. The non-farm payroll, one of the very, very important US job data. Normally, if the non-farm payroll, this data provide some high reading, better than expectation reading, normally the gold market will drop. But non-farm payroll will combine with the unemployment. You need to combine these two because normally they will release together one. So if non-farm payroll is very, very good, very, very high reading, better than expectations, and then if the unemployment rate is low, is very low, which is very good for the US economy, then this is a time that you can consider a sell order for the gold market. It's very good for us to focus on. So job market is also very, very important. And then another thing is most important, which is the inflation data. So as you guys also noticed, right, today we do have one crucial inflation data, which is the CPI is going to release today. Later, we'll try to understand how the CPI affect the overall trends for the gold market. But normally, if the CPI provide a very good reading, then it will likely to cause the central bank to increase the interest rates. Then the dollar might consider to break above the resistance. Then the gold price should drop more. But you still need to, it's better for you to wait until the data release, because for new trader, there will be a very high volatilities, especially just after or before the CPI data release. So the movement should be expected around 100 pips. So for new trader, you need to bear with the high volatilities movement later. Okay, so CPI data, we are going to discuss on it later after the 31 minutes. So we have some patience first. And then for those new trader, they want to understand why CPI data is very important. So I'm going to explain it now. So CPI data is considered one of the famous inflation indicator. So when the CPI data are very, very high, it means that currently the US cost price of goods sold, their price are very, very expensive. So a lot of people is going to suffer from it. Imagine everything that's surrounding you, any needs that you are going to purchase in future, their price keep increasing and increasing. And imagine if your salary cannot align with all those the price increment, you will be suffer from it. So as a central bank perspective, they need to control the inflation. So now we are going to touch about the monetary policy, how the central bank use the monetary policy to control the inflation. And then we can try to use this to explain the overall currency movement combined with the gold market. So now imagine, and now currently we can also notice, right? You think everything surrounding us are very expensive already. Price keep increasing, and then the US inflation rate previously is actually hit like more than 9% previously. So inflation is very high. A lot of people suffer in the United States. So central bank need to step up and do some policy. What their policy is, they need to control and slow down the inflation. So how can they do it? So the step that they are going to slow down inflation is by increasing the interest rates. So it's quite tricky. So how can we link this to our trading strategy? So normally, right, if the central bank decide to increase the interest rate, the currency will likely to increase one. Why I say this is because when the interest rates become higher and higher, more and more investors will likely to decide to put their money and save in the bank, earn higher deposit rate. So compared to the gold market, right, the deposit amount and then the amount that you purchase the gold, both are the safe haven. But when you deposit in the bank is going to pay you interest. It's what we call the deposit rate. So when there is two safe haven, either you want to save in the bank or you want to buy gold, there are two safe havens investment strategy. So of course, you are going to choose that have some deposit rate one, because if you buy gold, there is no deposit rates that bank is going to give you. So normally, if the inflation is too high, and then if the central bank decide to increase the interest rates, normally the currency, the FX, its value is going to increase further. So especially for gold market, you still remember that I mentioned just now. So if inflation very high, then if the central bank is going to increase the interest rates, normally, right, dollar will go up. So when dollar go up, right, gold market will likely to drop. So this is the understanding that for new trader, sometimes they might confuse why high CPI data will likely to trigger the gold market. It's because high CPI data will link to increase of interest rates. So currency of dollar will go up, gold price will go down. So you might also explain, and you might also trying to understand why they want to increase the interest rates. Put it in a very simple way, right? So when everything becomes very, very expensive, the bank decide to increase the interest rates. There are two ways that can cause the price going down. The first way is when they increase interest rates, it will trigger more people to save money in the bank. They will prefer to save in the bank to gain more deposit. There is no spending, lesser spending and lesser cash on hand. So when no spending in the market, the price of the good is going to drop. This is the first explanations about high inflations linked to why the central bank want to increase the interest rates when the inflation is too high, because they can control the spending. The second thing is regarding the borrowing rate. So when inflation is too high, right, the central bank decide to increase the interest rates. So when you increase interest rates, the borrowing cost for you, if you want to purchase a house, you want to purchase a car, for example, previously your loan interest rate should be around 1%, but now the central bank increased until 10%. You need to pay more of the 10% borrowing cost for you to purchase a new car, a new house. So of course, with higher borrowing costs, it will discourage you to purchase more. So when you do not purchase, you do not borrow money from bank and purchase house and car, their price is going to drop also. So the inflation is going to stabilize also. So these are the two main things that are to explain for your understanding that why normally the CPI data have such a huge impact in the market. So especially the data later. So we are going to focus on it. So another fundamental for gold is we can understand gold as a safe haven investment. So normally, especially during COVID-19 time, you can notice that COVID-19 is actually happens on 2020 March. So during that time, right, you can notice overall charts 2020 after the COVID outbreaks, overall trends for gold market from 1005 increased until around 2000. So this is one of the famous safe haven consideration for the investor. So to put it very simple way, right, when there is high risk in the market, including the COVID-19 outbreak or even the Russian-Ukraine war become worse and worse, normally investors will try to consider to invest in the gold market. Because, right, if we are going to, like, if there's a war in the market, if there's a COVID-19 in the market, right, business will be very, very bad. So nobody is going to profit from it. Imagine during COVID-19 pandemic, global economics lockdown, everyone stay at home, business becomes suffering because nobody is going to spend outside. So this is a key thing that when business suffering, there will be a high chance that the equity market, especially from the US equity market, is going to drop. Because when business is suffering, nobody spending, profit will lose, and then their overall financial statement will be very, very pessimistic. So a lot of investors will try to sell the shares, the stock market in the United States or even the global equity market. So of course, when they sell something, right, they are going to look another substitutions to purchase on it. So gold is one of the famous things. When high risk, you can expect if bad economic outlook, then investors will try to shift their portfolio into the gold, because gold, they're highly unlikely to devalue due to the instability in the market. So COVID-19 is the one of the example for people to understand the overall movement for gold. And then now the latest one is regarding the Russian and Ukraine war. When Russia declared a war with the Ukraine, you can notice the overall gold price is actually increased aggressively, significantly. So this is another proof. So for future trader, right, something you need to be careful is you need to continue monitor the news and see whether in future the macroeconomic outlook become worse or not, and even the geopolitical risk in future will become a more serious thing or not. So this is a thing that you can use it, then put into your considerations to invest in the gold market. So to understand in a very simple way, if you assume in future the market risk is very, very high, a lot of people is going to worry about the equity market is going to drop, or maybe the Chinese property crisis is going to have some domino effects towards the global economy, then this is a good alternative investment that you can consider. Instead of the equity market, you can try to shift your portfolio into the safe haven gold. So this is something that we can learn from it. So this is a thing that unpredictable. That's why you need to keep monitoring news day by day. Okay, and then very simple for the gold market. So 3 big things that are going to affect the gold market as for now. I put a summarize for you guys. The first thing is regarding the economic outlook. Whether the economy is good or not is going to provide some impacts towards gold. How can we understand the economic outlook? Is by looking on the economics data, especially from the US economics data. There are tons of economics data in the market, so I summarize for you all. The most important economic data is the GDP data. The second important data is regarding the job market data, including the non-farm payroll, unemployment rates. And then the third thing is the inflation data. They are going to provide significant impact for the gold. Later, we will try to experience it already after the CPI data release. So this is the economics outlook thing. The second thing is regarding the movement of the US dollar. Higher dollar, gold price will normally drop. The third thing is regarding the monetary policy. So when the central bank decide to increase the interest rates due to high inflation, then this will be the chance for the gold market to drop, because investors will prefer to save their money in the bank to gain higher deposit rate instead of just invest in the gold market. So this is all the major news that are going to impact the gold market as for now. So it's better for you to understand everything so you can be well prepared. And then the fourth thing is regarding gold can consider as the most famous safe haven investment. Anything regarding the virus outbreak, or even there is war over there, or even some country, example, some property sector in China face some crisis, this is something that we can also consider to it also. So gold market, gold is also is a consideration for a very good safe haven investment. So after you guys understand about the gold, now it's time for you to understand another market, which is regarding the oil market. So oil market is also very famous for everyone, especially recently. If you are going to look at the oil charts, overall trend for the oil are very, very good. And then you can also notice it's keep increasing more and more. So I will try to update you some fundamental of the oil movement. So what's the impact that how the oil market is going to increase more or decrease more in future? What is the fundamental thing that we need to be careful on it? Okay. So for the oil market, right, a very good thing is how can we analyze the oil market is by look at the three important fundamental. The first fundamental is regarding the global economy, and then the second fundamental is regarding the global supply, and then the third is regarding the OPEC initiative. So global economy is one of the famous things that you can try to link with China economics outlook. So for example, in future, because China can consider one of the major oil importer in the world. So put it in simple way is China is the major oil buyer in the world. So if China economy is doing good, then they will purchase more oil. And this is the time that can support the oil price to go up due to higher oil demand. So we need to understand about the economics outlook in China to understand whether there is any improvement, especially post-COVID recovery. So whether they are going to recover from COVID. We need to understand about the Chinese economics data also. That can also provide some support for us to understand the oil prices in the future. The second thing is regarding the global supply level. So global supply level, there are a lot of things that unpredictable. For example, natural disaster. So the latest news is regarding the Libya. The oil price, why the oil price increased quite aggressively is because of Libya recently, they are actually shut down some of their oil exporting. So this is a thing that can affect the oil supply. When supply go down, the overall oil price continue to go up due to the reason Libya thing. So this is something that very difficult for us to predict. Normally it will caused by weather, hurricanes, things like that. And then the third thing is regarding OPEC Plus initiative. So this is one of the group. OPEC is actually one of the group, and then their primary role, right, is actually coordinate and manage the oil productions level to stabilize the price. So put it simple way is when they think the oil price are too cheap or too expensive, they will trying to decide whether they want to increase more productions or reduce oil productions. This is also another thing that unpredictable that might also trigger a lot of traders to experience some losses just because of their statement. So this is a thing that you need to extra bear in mind. You need to understand what is the OPEC perspective. You need to understand whether in futures they are going to increase the oil productions or decrease the oil productions or not. Then in order for you to enhance your trading strategy. Okay, so OPEC is a key, very important group because they decide whether they want to produce more oil or not. And then this is also the latest fundamental that caused the oil price to continue to increase more. Because right, previously, I think 2 weeks ago, OPEC member is actually gathered together and saying that they are going to reduce their oil productions until the end of the year 2023. So this is a key thing that keep boosting up the oil price just because of the OPEC statement. They decide to reduce oil productions. So this is the power for OPEC. So for oil trader, OPEC is the things that you must understand. Then the other thing is the global economics outlook. So China economics outlook, even the US economics outlook are very key thing, important for everyone to focus on. And then the supply thing, very simple only. You just look at the news and then determine whether there is any natural disaster that's going to affect the oil prices. But this is something unpredictable, and then because it's very difficult to predict when and where there will be a natural disaster or certain places that can affect the oil production. So you need to extra bear in mind also for natural disaster. But another thing is very simple way is regarding the crude oil inventory data. Very famous, very important for all the traders. So you can actually just go through the economics calendar. You can notice that every week we will likely to have oil inventory data, especially for today. Not only the CPI data are very, very famous, the oil inventory data is also important for everyone to focus on. So if the oil inventory data higher than the market expectations, then it will likely to increase the expectations that currently the demand are still very low for oil, the supply are still very high. That's why there are a lot of inventory there. So this might trigger some drop for the oil prices. So oil inventory data is also another thing that we can focus on it also. So if you forget what is oil inventory data, you can just feel free to click inside. Then there should be explanations on it already. You can try to understand from it. Okay, so now most of the important fundamental you guys already understand, especially for the oil markets, for the gold market. Now I think we are going to have another 6 minutes of waiting. We are going to wait until the CPI data release and then trying to update you guys from it. So before the data release, right, maybe you can analyze some charts first. Maybe you can focus on the gold market first. You can notice overall trend for gold market is keep dropping one. And then especially for yesterday market, right, after it successfully break above 1915, it continued to drop further. And then the recent candlestick, right, is quite nice to indicate this should be a very good successfully breakout, because normally a good products breakout, you are trying to retrace back and then retest on the resistance level. So you can notice after it just retest the resistance level, it continue to drop. If we are going to according to technical analysis, there will be a chance for the gold market should be continue to decrease further one. Maybe the next support level we need to focus on is 1900. But because of this is a very high volatility market, a lot of traders must bear in mind, and then stop loss is the things that you need to set for it. But if you are going to look at the risk and reward ratio, right, your stop loss level, I would suggest you to put above the 1915. Maybe you can put around 1918 around here. Your TP level is quite much, because we can expect that the chance for oil market should reach further. Maybe you will reach around 1900. So your TP level should be around 100 pips. But stop loss level maybe around 80 pips or 90 pips. But your TP level is around 100 pips. It's a good thing, but the first thing you must bear in mind is CPI data, especially you trade during CPI data, market volatility are very high, and sometimes it is unpredictable. Even though, right, you can notice why a lot of investors sell off the gold market, even though before the data release, is because of, you can notice, right, a lot of economists, this is an economist forecast, economist forecast. So when we have some comparison between forecast and previous, a lot of economists is actually forecast that the CPI data will likely to higher than the market, higher than the previous reading. You can see the YOY annual CPI data previously is 3.2%, but now economists forecast that there will be a chance for the CPI data to reach around 3.6%. So a lot of economists trying to forecast like this, but there is also things that sometimes it will also our expectation. Even a lot of economists forecast it will increase, right? But sometimes the market will suddenly have out of market expectations one. So there is no 100% guarantee whether you can buy or sell gold. For new trader, you can just experience to it. For older trader or experienced trader, it's better for you to set some stop loss, or maybe it's advisable for you to open a smaller lot size positions because movement should be around 100 pips. Sometimes it might reach your stop out level. Even your trend is correct, right? You think this is a very good sell, but sometimes, right, you will stop out before it's dropped. So it's advisable for you to open a smaller lot size, especially just before the data release. So high risk things that everyone should be very careful to it, and especially now the news in the market, all around the news in the market is surrounding regarding the US inflation rates high or not, whether the central bank is going to increase the interest rates or not. This is all the main surrounding things right now. So trader, a lot of investors is going to focus to it. Trader are going to focus to it. So when one product, a lot of people going to focus to it, then the movement should be very significant. So yeah. But if you're going to look at the charts, maybe it will consider to drop further because this is a good breakout. So it's advisable, but you must set your stop loss level because once it reach 1915, you need to have extra be careful things. But of course, some of traders might think everyone think this is a good time to sell. Then maybe they want to beat the market difference from the market. So they decide to put some buy order also can, because if you are correct, right? If the CPI data suddenly very low, maybe lower than the previous reading like 3.2%, then the movement for gold should be expected to have, it might be increased aggressively, but the probability should be low lah. So high risk, high return. High risk, you are not going to hit it, like you are not going to successfully predict the CPI data, but once you are correct, you buy gold, then your return should be very high. So it depends on how are you going to play around the CPI data. Somebody is going to play something like completely different from market. Everything think this is a good time to sell, then they just do another trade, they just buy it. So if they are correct, everyone is wrong, then the movement they can gain a lot from it. Okay, so this is something to it. Now we wait for another 2 minutes. Open for Q&A sessions. Anything you guys want to ask me? Regarding the market things. So you guys really need to bear in mind, this should be a high volatility movement market. So new trader need to be careful. Experienced trader, is better for you to set some stop loss level. So 1 more minute. We are going to wait through it. I think it's better for us to look at 5-minute charts. For Q&A session, I will try to answer after the CPI data since just 1 minute more. So yep. 1 more minute, and then you can see oil start to have some movement already. Are you guys nervous? Good experience for us also, like experience this high volatility market together. So you can see that the CPI data is much higher than the market expectation. Then if we are going to look at the gold prices, the first reaction for gold is dropping. But you can see a lot of traders trying to fight towards it and don't let it to continue drop a lot. So this is the key things that you are going to bear in mind. Maybe you can focus on the 5-minute charts. If everyone is thinking the same thing, the CPI data is very high, then dollar is going to increase, then the chance for gold market is going to drop more. So short term, right, for trader, right, maybe 1900 is a good considerations for you. But if you don't want to, you think too high risk already, maybe you can set around 1901, 1902. So if you are going to, according to previous support level, 1900 is a very important thing. So it depends on how you want to take profit. As for now, you can notice the candlestick is very, very unstable. Just a 5-minute chart, it dropped around 550 already. So keep looking on it. There will be a chance suddenly this candlestick form a shadow and go up and then go down also. So this is something that really unpredictable for everyone. So just experience through it lah. But according to H4 charts, it's still a good sign. If this candlestick do not suddenly turn and become a doji candlestick, inverted hammer candlestick. So once again, congrats for those who really making money from the CPI data. And then for new trader, it's good for you to experience this kind of thing. So you can have a better experience. You can notice that the candlestick movement should be around 70. So it's good within our expectations. Since just now we're trying to forecast, maybe it will drop, and then we try the economist forecast is also correct, since they forecast the CPI data are very, very high, very, very good. Okay, so I think you guys already trying to experience to it. Now it depends on how you want to trade on it. There is no trading advice from us, because this is mostly for educational purpose. So maybe you can explore this together, but no trading advice. Yeah.